about the economy, sir. What's your outlook on the economy next year? All good. Take a look. It's all reported the right way.
President Biden blaming the media for America's frustrations with Bidenomics as a year-end poll reveals just 39% approve of his economic agenda. Fox News contributor Tammy Bruce joins us now.
So the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. I just want to know.
I think that the Fed is going to be doing everything it can to try to reelect Biden or whoever may run if Biden does not. I think it's clear that that's what's going to happen. And I know that from prior election cycles.
And of course, I agree with every word of that. But I would just raise one other possibility, which is the economy, which is, it's an election year. So it's possible now, because everything is centralized and everything emanates from the Fed, everything's about interest rates. It's possible to kind of hold markets up for a period. You're straining under the weight, but you can do it to November. That is their plan, okay? And then after that, they'll think of something else. But their short-term plan is to keep economic collapse at bay until the election. They're really, really trying hard. And they may be able to pull it off, but let's say they don't.
What is going on YouTube? It's Brendan from Market Makers. Happy 2024, everybody. Hope everybody had a fantastic holiday, fantastic new year, and everybody's safe and sound and ready to kick this market off, because this is going to be the year of volatility in the marketplace. I'm going to give you my 2024 forecast, guys, and there's a lot to talk about in the markets and a lot of catalysts that could come into play this year. Most of them are going to be negative because of where we are in the marketplace. And a very special welcome to the subs that have been following us since we started the channel in summer of 2021. Now we have over 31,000 subs. So if you guys like this content, you appreciate this content, be sure to like the channel, subscribe to the channel, click the little bell, get your notifications, because it's going to be a very fun year. Let's just kick it off with the 2024 forecast. And I got some charts I want to show you that tie in to our intro. So this is what I see happening this year, guys. You have to understand where we are in the business cycle, which is why I wanted to play that intro with the clips. The Fed is very political. The Fed is very political, and they're going to try to hold the market up. Everybody recognizes they don't want a market crash in an election year for two reasons. One, they don't want to be seen as influencing the election. And two, they always support the incumbent. Remember, Trump nominated Powell. Horrible decision. And Biden renominated Powell. So he has skin in the game on both sides. But in general, they do not want to see a market collapse during an election. So here's the problem the Fed is going to have. We're going to try to hold the market up. And this is why Powell went from, in a 2-week period last year, we're not even talking about rate cuts, to 2 weeks later, talking about rate cuts and adding another rate cut in for 3 rate cuts for this year. The market has priced in almost 7. And now everybody believes, once again, no recession. Remember, the consensus is always wrong. That's why so many commentators say, I'm a contrarian. I like to think the opposite of the consensus. 2021 end of the year consensus. Inflation's at 9.1%. Tom Lee goes on TV on CNBC in December and says new all-time highs for 2022. 250K Bitcoin for 2022. And I'm not picking on him. That was the consensus. Everything was going to be bullish. Why? Because inflation was transitory. And what happened? The markets collapsed last year, or 2022. The S&P fell 24%. The NASDAQ went down over 30%. You had Bitcoin fall over 75%. And then the consensus switched to a recession for 2023. That was the consensus. So everybody was off sides. And what did the market do? Massive rallies. NASDAQ up more than 50%. Bitcoin went from 15K to 45K. And that's where we're at in the market right now. And everybody, once again, the highest bullish consensus on Wall Street right now since 2022, January. right? Right before everything fell apart. This is the highest bullish consensus in Wall Street. So nobody has a recession except for the few clips I play you of people like Michael Darda. Everybody else is on the bull train for the market, expecting the market to do something it's never done in market history, which is put in a bottom before the recession. So this is where we tie in my forecast with the charts. What I think is going to happen is we're going to look to peak at the end of Q1. March, April. Those of you watching this channel, you know that significance. That's the spring equinox. Why is that important? It's a natural pivot point in the market. Wall Street knows this. They just call it seasonality. They don't call it the spring equinox. This is why you had March of 2000, the peak in the marketplace. This is why you had Lehman fail in the 2008 great financial crisis in the spring equinox. This is why you had the market bottom in March of 2009 in the great financial crisis. You had the pandemic plague sell-off in March of 2020. We had the second largest bank failures in U.S. history in March of 2023. So once again, I think the spring equinox is going to play a key pivot point. I don't think the economic data has degraded enough to scare the market yet, but we're going to look at the charts because what I do differently than most people on YouTube, I base my views and opinions on market history, market cycles, and advanced pattern analysis. That's what you have to do, in my opinion, to really understand what's going to happen, because there's going to be a shit ton of opportunity this year for trading tops and trading bottoms and getting in here, because what I think is going to happen is we're going to rally up to March or April. I know everybody's looking for a retracement right now. Of course, we're going to retrace some. I think we're just retracing lightly here to burn off these overbought conditions to move back up. Okay, I'm looking for that peak March or April. And then this is the key point. If the recessionary data really starts to look like to the sheep, the hive mind of Wall Street, oh shit, we might actually have a recession. This is when you're going to see the markets come down. And what do the markets always do in every single recession cycle in US history? They take out their low. They take out their low. That means the S&P will come down below 3,500. As you guys know, I have 3,200 as my target. Bitcoin in correlation will come down to, I believe, 11 to 13K, taking out the 15K bottom, okay? And when this happens in an election year, the Fed under Powell is going to have a very important, very key decision to make. Do they step in even if we still have inflation? Do they step in and do their quantitative easing, their money printing, reinflate the bubble? If that's the case, we'll be able to buy at new lows, let the Fed push everything back up, reinflate the bubble going into the election. Or does Powell sit on his hands, grow a spine, grow a backbone, and say, you know what? We don't have 2% inflation. Let the market fall. Right? Going into an election year. Now, most people, including Peter Schiff, that you just saw there as well in the intro, he thinks the Fed's going to print. Why? Again, historical precedent. That's what they do every time going into recession. They cut rates dramatically and they print and they ease, and you'll have the government under Biden rushing in new emergency programs and bailouts, and you'll see failures of companies, potentially another banking crisis. So it's easy to say Powell's going to take the just road and not actually print money or loosen financial conditions even more, but historical precedent tells you that he will, okay? But either way, there's a trigger for that, and that trigger is the recessionary reality. So let's throw up our first chart. Lee, give me the unemployment chart. On Bloomberg, I watched all morning this morning. Same story, different day, same story, new year. Unemployment has been so resilient. We haven't had the spike in unemployment yet. Where's the spike in unemployment? Lee, highlight these recessions for me. Look at the red line, guys, on this chart. Unemployment is always at a cycle low. This drives me crazy that me, just some guy on a ranch in Florida who's been trading on his own for 20 years, who worked at Merrill Lynch for 13 years, just some guy can sit there and analyze the data, and they can't seem to figure out, when does unemployment spike? Look at the chart. It spikes after the recession. prior to the recession, you're always at a cycle low. Our cycle low was 3.4, currently sitting at 3.7. Expected uptick this week to 3.8. Not once in US history have we ever had a business cycle peak below 4% unemployment that didn't spike up to at least 6%. That is a 50% rise from where we're at now. And I don't think it would stop at 6. I think you'd be looking at 6 to 7 if Powell doesn't step in and bail everything out once we have the sell-off. So that's the first chart. Second chart, Lee, give me the post-yield curve inversion chart, please, if you would, sir. So guys, this chart shows all the recessionary cycles. Now, the line I want you to focus on is the red line. That's the current cycle. When you have a yield curve inversion, how does the market behave historically in every single recessionary cycle? You see it rally and you see it fall. Now, that's what we're doing now. I believe we're going to rally right into the recession, which is why I'm looking for these market tops in March or April, the end of Q1, the spring equinox, key pivot point in the marketplace, okay? That's what I think is going to happen. The beige line, the line just above the red line, that's the GFC. We did the same exact thing. We rallied right into the recession and then we collapsed, okay? So let's look at one more chart. Lee, show me the LEI index. Guys, this is from the conference board, the leading economic indicators. Since Q1 2023, the LEI has been hovering around minus 8.3%. Now, not once in history have we ever been above minus 5% and not been in a recession already. In other words, minus 6, minus 7, greater than minus 5%. We've been in a recession every single time. We are at minus 8.3. The only positive indicator in that basket of leading economic indicators that's tracking positive right now is the stock market. And look where we are, minus 8.3. So if you don't think that any of these historical indicators matter, that's fine. But I'm just telling you, you're going to get crushed. You're going to get crushed when the market realizes what's happening, because you guys saw over the holiday trading in that 2-hour time period. What was it, a Wednesday? In 2 hours, the market wiped out 5 days of gains in 2 hours. There's no such thing. Let's go ahead and crush this fallacy right now. There's no such thing as smart money or dumb money in the market. It's all dumb money. It's just big money and little money. 80% of traders, 80% lose money. 84% of professional money managers who are expert stock pickers, like Jim Cramer, they cannot beat the S&P over a 10-year period. 93% cannot beat the S&P over a 20-year period. These are all historical facts. The reason Wall Street came up with that term, dumb money and smart money, is to take your money, to give them the money to invest so they can make 20% off the gains and charge you management fees, when in reality, your grandmother sitting at home buying an ETF of the S&P will beat 84% of the professional money managers on Wall Street. So without further ado, like, subscribe, guys. Lee, let's go ahead and kick off the show. All right, boys and girls, if you are going to venture to trade these markets, I would ask that you check out the fantastic sponsors of this program, SimpleFX and BingX. With our link on SimpleFX, you do get up to a $5,000 instant first-time deposit bonus. Lee can help you with the process of signing up, and both of these fantastic exchanges give you a free month in our Discord where you can get all of our indicators for free, our TA, our trading ideas, and a fantastic community, all for free for a month. The Telegram link is pinned in the video description, or pinned in the YouTube comments, and also in the video description, as well as the exchange links, okay? So if you like the channel, support the channel, do appreciate it. Let's jump into Bitcoin, guys. So going back to October 23rd, where I shared this fractal breakout, remember I gave you this trade prior to it. I'm not in this trade anymore. I wonder if anybody's still in this trade. Congratulations, because you got a 44% move off this October 23rd long that I shared. And guys, I saw on Reuters today, this morning actually, they said an ETF decision may be made by the SEC as early as today, tomorrow, Wednesday. I find it fascinating how many people in the crypto space support the Biden administration because they hate crypto. Who do you think appointed Gensler? The Biden administration. I was a big online poker player back on Black Friday. That's when when Biden was vice president, they banned online poker. They actually banned all the banks from transacting with the exchanges. And that's how they got rid of online poker. They do not like financial freedom and money they cannot track. So keep that in consideration, guys. But looking at this again, so what's our next targets? We got a 44% move, got above our 2618. Fantastic. Let's go and look at this on a clean chart. I pulled the fib down from the all-time high, guys. The obvious next target being above the 50% fib at 42,246 is going to be 48,562, right? 48,562. And we are forming a W here. You see this? We're forming a W pattern. We got a little bit of a retracement. So let's go ahead and look at this as well and see where this would track on the daily time frame on Fibonacci. And then we'll look at our indicators as well. We're looking at 46.4. We got all the way up to 45.9. So 46.4 didn't quite get there. Already got some of the retracement as the markets were retracing some today as well. So we're going to look at that in all the charts. But the clear level to me is at 48.5. If you get an ETF approval, I can't tell you how much euphoria there will be, guys. But that's the next key level to watch, 48.5. Conversely, if Gensler says no, we're not approving any ETFs, you could see this drop right back down. So again, I don't trade binary situations, yes or no situations, when it's going to affect the market potentially in a dramatic way. But I will be watching if we get a yes situation, if that euphoria takes us up to 48.5. And I've told you this many times in prior videos. If you get to 48.5, you're probably getting to 50K, okay? Because of the psychological aspects of it. But watch this W pattern as well as it forms. Let's look at our indicators on Bitcoin because you're trading at 44,975 right now. You're flat on the MFI, so you're staying bullish. Momentum is staying flat as well. Lots of money just waiting to see what happens here, guys. And let's see, this is going to be heavily correlated with the indices. And you need to understand that because let's look at our targets. The S&P has not done what every other indice has done. The Paris market, the German market, the US indices, the other US indices. So let's look at this. Remember our targets from Fibonacci, the October 12th, 2022 rally down to the market low. 1618, 48.42. Didn't get there. Got to 4801.9. So 4802. Didn't quite get there. I think you're getting this retracement. I know a lot of people are making videos about the crash, the early crash in January. You know, people are making videos over the holidays. I understand that. Is a strong retracement possible? Sure it is. Lots of people are pulling a fib retracement from down here, the rally low up to the rally high, and your 382 is all the way down at 45.35. The 618 is at 43.70, okay? 618 most commonly retraced to fib in a 30-year study on the S&P. I don't see this happening. It could, and again, loads of negative catalysts out there, multiple war fronts, bad economic data potentially coming down the pike day after day, could have unemployment tick up, could have inflation tick up. So lots of bearish catalysts are out there. But barring anything that's escalating, what I think is going to happen is you're going to float in this area to work off this overbought condition. If you look at the indicators on the 3-day chart, you bounced right up into overbought, bouncing back down, clear bullish uptrend. And the reason I bring this up is when I look at this on a larger time frame, my 5-day or my 1 week, I know a lot of people use 1 week, so I'll look at it. 1 week, you have a clear uptrend in the weekly, right? And you got almost overbought here. You don't often, if ever, get overbought in the weekly on my 90-10 settings on the MFI, but you still have room to move up. And I think you're going to get to that 48.42 and then have a retracement. But I'm looking for that Q1 peak in March or April. Okay. I think that's how this is going to play out with the economic data, the historical pivot point in the marketplace. Let's look at this again on the daily. Let's look at these retracement levels a couple different ways. So from the bottom level retracement, you'd have to fall a lot. So what I'm going to do is take this previous pivot right here, right? This is our previous pivot on this up leg. So let's go ahead and take a fib on the S&P here. We'll go right to this breakout point to the current up leg. The 3D2 is still down at 47.03. 47.03. You're at 47.40. Could you continue to fall down here? Yeah, you could. I mean, you've already touched it, 47.03. If you look at this from an even tighter wave perspective, this is what I'm saying. This is not a big retracement yet. There's rotation going on. This tighter fib retracement, you're at the 618, 47.39. So if you can stay above 4,700 and start chopping around, I think you're going to see the market want to power higher going into the end of Q1. And again, end of Q1, market starts selling off. The peak is in. Maybe rates are going back up as well. But that's when Fed Chair Powell will have to make a decision if we get that momentum in a downward move in the marketplace. So I'm looking for this to hold above 4,700. If it starts breaking down below 4,700, then that's a different ballgame. We could be retracing to a much deeper level, like from whence we broke out from that 4,600 range. Okay. So we'll see how this pans out here. But again, this looks to me like we're going to chop around because ultimately, I think we're going to get to that 48, 42. And where's my end goal for Q1, guys? For that level, we go to the corrective high, July 27th, 2023, down to that corrective low. And that ultimate goal we've been talking about is 49.22 to the psychological level of 5,000, right? That's the end of Q1 target I want to see. I want to see this retrace, whatever it's doing here, come back up, come to 49.22, maybe make its top or go slightly higher to 5K, hit that psychological number, and then we'll see what happens, what types of patterns we get that play out. Now, keep in mind on Wall Street, Oppenheimer is one of the most bullish price targets for the end of the year. They have 5,200. You're at 47.50. Okay. It's not a big up move. And I think you're going to get there. I think you're going to get to that 4,900 to 5K by the end of Q1, regardless of what we do here. If we end up making a double top or a 5-wave top like a Head and Shoulders, come down, even if we do come down to 4,600, I think you're going to want to power back up to this range. Every other market got to its 1618 expansion point except the S&P. And it doesn't have to, but I just think the odds are it's going to. And that target is 48.42 for the initial level, and then the higher level targets. Because if we jump over to the NASDAQ, which is up 50% this year, same targets, guys. Let's pull a fib. August 12th, 2022 to the market low. You got, not only did you get to the 1618, it tracked beautifully. Look at your 1618, and this was your big corrective move in the NASDAQ, symmetrical correction, breakout to the upside, got to the 200% retracement at 17,000. Okay. That's where you are right now here on the NASDAQ. So if we see the S&P, and I'm basing my market view around the S&P, the 500 largest companies, because that's going to be a driver. You'll have outperformance potentially in other indices, but the S&P is the overall metric you want to track. So we hit the 200% mark. And guys, what this looks like to me, you can see this is a much steeper sell-off, different formation than you have on the S&P. This is the beginning of a 3-wave potentially formation, right? So you have your wave down, and if the S&P does rally back up to say 48, 42, you want to watch the NASDAQ, because if it does this, you're making a 3-wave top, right? And this could be that larger retracement level to come down. And then we'll see if we can base, get our double bottom structure, our pullback, and come back up to a new target, take new Fibonacci projections, but it will all be based on that movement of the S&P. And if we look at this corrective structure of this move here to get the second Fibonacci target, we almost got there already because of the outperformance in the NASDAQ. The 1618, the harmonic expansion is at 17.1. As you can see, we almost got there, which is why I think you're going to see a topping pattern form. Remember, there's a lot of people on the professional money managers talking about rotating into different sectors, the catch-up trades of small caps like the Russell or healthcare or utilities or oil or whatever. So if tech, which I don't think is going to become too less favorable, but if it does become less favorable, watch for a 3-wave pattern. Watch for this key resistance 17.1 to 17.3 in this range. If we see the S&P work off this overbought condition and try to move up to that 48.42, which let's just call 48.50. Again, psychological number, okay? And from that level, maybe we get a little bit deeper retracement. If we end up moving to 4922 to 1,000 at the end of Q1, which is what I'm looking for in the S&P, then you would have to gauge this. We don't know what the outperformance level will be, but the next target's up for you. If that's the case, we would go from 17.1 up to the 200% retracement from this corrective move, guys, on Fibonacci expansion, 17,815 to 18,975. Could the NASDAQ do that? Maybe not. Maybe not if some money does really get pulled from here and go into other sectors, which is why we want to see how this plays in correlation with the S&P. So go to indicators. Again, overbought here on the 3-day chart, bounce back down, clear bullish uptrend. When you bounce out to the weekly, believe there's still more room for the upside. There is more. Look, the NASDAQ gets overbought in the weekly, and this is a key thing for me. Weekly MFI, right? Weekly MFI, and again, you get all these indicators free, guys, if you join our room. The weekly MFI right up here, you can see you got overbought above 90, and you saw it roll down and you had a big corrective move. There yet. To me, this looks like you're pulling back and you're going to get that last move back to the side is what I think will happen. So we'll see how it plays out. Let's go ahead and move forward. The baby S&P. This has the harmonic expansion. We went over last video from two different regions, so it doesn't matter where you pull this from, but let's go ahead and pull it from the same exact way as the NASDAQ, the S&P, just to show you a point here. Everything has got to the 1618 except the S&P. If I can get this on the actual candle, there we go. 37,799. Look at this. We hit it beautifully, right? 37,799. You're 1618. And now you're starting to fade a little bit. You're getting several days of doji candles. You've been in this overbought condition, but you're pulling back down. Momentum is still positive, but it's trending downward slope. Volatility, momentum, trending downward slope. But I want to see, because this is my gut feeling, not a big retracement in these areas. We start chopping around like Bitcoin did. If the S&P moves back up, maybe we get to the next level up. Maybe we just pull down and pull back up. And so keep in mind 37.8 to 38,449. We'll see what happens. Time will tell. Time is much more important than price. But again, your 1618 target has been struck. Let's look at the Russell. The Russell, you have not struck the 1618 target. You're way down and still in the Russell, okay? 40% of the companies in the Russell are zombie companies. They make no money at all. So we have the Russell had the quickest turnaround, if I heard that correctly, the quickest turnaround from a market low in the cycle to a rally high, the quickest turnaround. So this was a big move in the Russell. Now, from a Wyckoff perspective, you're trying to get on top of your range to pivot back out to the upside. Pulling a fib here from your all-time high to your recent market low. You got above the 0.5 fib at 2048. However, you're below now. Your next target is 2146. If the Russell can pivot to the upside, if the S&P can hold its ground, recuperate, might take the rest of the week, could take next week, might get a little bit more of a retracement, but I want to see if we get that move up towards 5K. So what you have here in a bearish scenario is if the Russell three-way pattern comes back up and starts to fade, watch for that second up, potentially lower than that first top, and that can be a tradable move in the market. Again, a three-way pattern that you see over and over again in the marketplace. If the Russell flips the 0.5 fib at 2050, holds it this time, then look for this move to 2146. Go ahead and look at this as well in a 3-day chart. You were overbought. By the way, this MFI reading on the Russell on the 3-day chart, decade high. You have to go back a decade to find a similar reading. So you have extreme bullish momentum, extreme volatility momentum, MFI extreme momentum. Let's go to the weekly and see what we have here on the weekly. Weekly says you could roll over some here. As you see, the Russell rarely ever gets overbought on the weekly. These things vary by indice and asset that you track, so be aware of that. So we'll see if you can move up at all, or if you indeed are topping here in this range. Would love to see a move up to 2150. Just make it much easier on me. Top out a little bit higher. Let's move over to the DAX, guys. Again, European, this is the German market. Let's go over to same exact way we pulled the fibs on the US markets. This is going to be March 28th, 2022, pulling down to the market low. Beautiful hit on the 1618. Took over a year to get there, and you got there at 16.9. No candle closes above it. But this is a perfect example of what I'm talking about. The DAX is already doing it. I think the S&P is going to do something very similar here. These are 3-day candles. Look at that. Side by side by side. multiple dojis. Let's look at the 3-day indicators and then we'll look at the daily. Got all the way up to almost overbought, rolling down some now, momentum finally cooling a little bit. And let's go ahead and look at this on a weekly. The weekly has room to move up, just like the US indices. This is why this is a very interesting range right now. Let's go to the daily. The daily, because it's been chopping sideways, which is what I think the US markets will try to do. We'll see how successful it is. But because it's been chopping sideways, you're resetting your oscillators. Do you see that? You're resetting your momentum's coming back to the median line. Your MFI came back to the median line. And what does that mean? What does that allow the market to do? It allows it to potentially wave back up again. Okay, so this is what we want to see is if we do wave back up, a new pivot comes out of this for a higher level target as the S&P tries to push up. Or do we start waving back up and you just can't seem to manage to crush these recent highs here on the daily time frame, give us some type of 5-wave pattern like a head and shoulders, or complete this 3-wave pattern for a double top on the daily frame. So key level on the DAX is going to be 16.9. Above that would be 17.2. Okay, but really it's this range. You want to watch this range. You want to stay above 16.640, and you want to see if you can stay below 16.9. Continue to chop side by side. Watch the US markets. Let's go ahead and look at the French market, the Paris market. Same exact thing, guys. On a Wyckoff perspective, look how beautiful this is. Selling climax, reaction. You have your down thrust here. You have your spring here. You came up, you pivoted just under the resistance. You see this pivot back out, came and back tested the base of your Wyckoff, and then you rolled up, right? Your Livermore pivot. You got the pivot, made a new all-time high, but then you rolled back over, retested the base, pivoted back up again, made another new all-time high. From a Fibonacci perspective, I love trading these European markets. They can be a lot of fun. But from a Fibonacci perspective, pulling it the same way as the DAX, the US indices, we're going to go to that rally high, March 2022, pull this down to your market low. Again, 1618, beautiful hit. Traded it here. If you held the trade, 850 point drop, right? Came back to the 1618, as you can see, struggling to close above that previous all-time high at 7,600, but you're stacking candles here as well, right? So let's see what this looks like on an indicator perspective on a 3-day chart. Let me zoom in some so you can see the candles a little bit better, but you can see this looks a little bit weaker. You got your wave 1 roll down, right? So here's your wave. If your wave up, wave down, that's your wave 2. Let's see if you get your wave 3. It looks like a double top, or if it wants to pivot, break the fractal, go to the upside. Time will tell. Let's look what the indicators tell us. And we were overbought on the 3-day chart. As you can see, this gives you nice retracements. So that's what you're doing. You're trying to hold this retracement level here. This gives you nice retracements. Momentum's rolling over. But let's look at the weekly, see if we have any room on the weekly. Weekly, you're at the median line. This has room to wave up. That's why you have to watch these US markets and see if the bullish stupidity continues to rally into the recession coming, okay? And if it does, then we're going to look for higher level targets. And the bigger they are, the higher they are, the harder they fall. Makes it a lot of fun to trade. Let's go to the daily and see how this is affecting the Paris market as well. So the daily, you got overbought clearly, made a double top on your MFI, double top of momentum coming back to the median line. But again, you're not really retracing much. And that to me is kind of the key concept here, guys, is you're just not retracing much. Yes, you have some moves down, but you're allowing all of your oscillators and indicators to reset. If we go from this pivot out here to this up move, all you're doing is bouncing right off the 382, the shallowest retracement from a very shallow starting point, 74.87, and you bounced right off of it. So watch and see if these markets, these indices all try to chop sideways, work off these conditions, and then it's game on if we're going to get more upward movement. So again, NVIDIA, you are struggling for a long time here now, since August of this 502 level, right? Here's your Wyckoff range, multiple hits here, 02, your low below 409. As you can see, you have a bunch of different patterns printing here. You had a smaller double top that tried to break down today, got bought back up. If this does break down, if the markets do really retrace, you have a much larger double top that will break down here below 450, bringing you back down to the bottom of this range around these clusters of candles, around that 410, 415 range. And there's fibs down there, guys. I just happen to have them memorized from looking at charts so much. But this is where you're looking at here, okay? So you have a bullish near trend of a low, higher low, higher low. You had a bearish pattern form, get bought back up. If the markets continue sideways, I'm expecting NVIDIA to also continue sideways, even though it was a massive overperformer, 240% gain on the year. You would expect some rotation out of it, but 0-day options, the record of retail traders in the market, they have different likes and dislikes in the professional money class. So you're seeing some overinflated assets like this still hold key levels. So this is going to be a fun one to watch and see what the market does. If you want to get really bullish on this, you need to see this pivot out above 502, back tested at some level, and then break that back to the upside. That's your move up. And obviously the bearish levels we went over. If you start in 480, then you come down, then you really got to watch these levels at 450, because if you start losing 450, you're coming back down to 410, 415 in your near-term movements. But you'll know that from the indices themselves. So look at Tesla. Tesla, if we pull from this trend high here on the daily, which is the July 19th, 2023 high, down to this low. Remember, we had these corrective moves or these downward moves here, equidistant of 30%, right? Market geometry, equidistant 30% moves. And then you have your rebound. I told you watch the 260. We got just above 260, 259 to 618. And you're still in that same range we've been talking about since my last video. 246 to essentially 260. Next key level up is 276, again, to be used in confluence with what the indices are doing. Last one, guys, let's check gold out. Gold, the nemesis has been 2075. 2075, 2075. This is my short up here for this nice 200 bar drop, 220 bar up. And then we have these parabolic spike up here, this sell off. And now gold is struggling right back at 2061, very close to 2075. So let's take a look at this, because what I see forming, if the S&P does chop sideways and does start to move up towards the end of Q1 to our 4922 to 5,000 range, where could gold get to in that situation if it continues to track with bullish markets? Guys, I'm looking at 1618 at 2225. Now, for that to happen, you have to get above that 2075 range. You have some bullish near-term TA, your bottom, your higher low, your higher low, your higher low. So you'd have to see this come up, get your pivot here on top of your range, right? Get your pivot, then pivot out to the upside, break this fractal or this fractal, whichever is higher, and then come up to this target of 22.5. 22.25. That would be a nice move, or you're going to end up topping out in this range with some type of topping pattern, especially if the markets start building tops, some new bearish information comes out, unemployment ticks up, inflation ticks up, whatever the case may be, and you're going to do something like that, okay? So you're at kind of key pivotal points in all these markets. Guys, next week will be our regular week for videos, Monday and Thursday once again. So please be sure to like, subscribe, leave me your comments. I will answer them as always. Always do appreciate your guys' support. And again, I hope you have a fantastic rest of the week. And I really hope you enjoyed the end of 2023, because 2024 is going to be a blast. Talk to you guys soon.